Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your metals market update, and we are now on Thursday, the 2nd of August, 2018, about 4:36 p.m. Central Daylight Time. As you can see in the metals, a terrible day for the silver, the copper, the gold market. Platinum stayed up. I didn't check palladium. We'll see it in a minute. Do not think this is where the market actually finished in the last moments of trading. It was down another $5 in gold approximately. Silver was closer to the 1530 level. Everything was slightly lower than they're at. The market broke through on these charts on the gold and the silver, what we call outside day up. It took out the low, and that puts into play what we call the Bollinger Bands, if that's one of the closest number, and you'll see what I'm getting at on that. In terms of, is anything going on positive? Well, the big event that carried the stock market was Apple. Tesla didn't do bad. Remember, you've got one of the heaviest shorted stocks there are in Tesla. And the news that Elon Musk threw out was good yesterday, and the market bought into that. We haven't seen anything new in NAFTA. I'm going to be gone, as I just said, from tomorrow, which is the 3rd of August, until back in the office for you the 13th. So you're on your own at that point in time. What I can tell you is gold's dropped $1.43 approximately on a weekly chart of closes. When you come to the daily bar chart, this is important. You had here, this day, Tuesday, an outside day up. If you get an outside day up, my rule of thumb is you should not take out that day's low in the next 2 trading sessions. If you do, then I look for what I call one of my key moving averages as an objective on the downside. Sometimes they're not there, by the way. They can be above the market. Or a Bollinger Band, which is often a number that's there. The market had an inside day yesterday, and you let go. I don't know where the support's going to show other than that Bollinger Band, and I'll show it to you. The swing line has a pattern of a higher high and lower low. This is not how bottoms are shaped up. I can tell you that the market's got its key moving averages above the market, not under it. That isn't going to help the market. So it's the Bollinger Band that came to the rescue. That number is 1217.30. You got down today to 1215.30, so you're literally right on it. Are you embedding? Now, for those of you that watch me, slow stochastics are made up of 2 lines that crisscross each other. One's called a K, one's a D. The whole difference in the two is the red, which is the K line, uses 3 days worth of data, same formula. The D line uses 5. And by the way, this is a good time for you to take advantage of learning my charting course, because you'd be able to really do a lot of this when I'm not around. You're oversold. To get them embedded means both numbers have to close under 20 several days in a row. Don't have it. So you have an oversold market that has had a failure, hit another objective number that a lot of traders that use Bollinger Bands probably did some short covering with. I can't prove it, but that's what I assume on the charts. In the GLD ETF, you have a different game going here. As you can see, both numbers in this chart are under 20 right here. They were under 20 on Wednesday. On Tuesday, they were not. So Tuesday not, Wednesday yes, Thursday yes. If the market is down tomorrow and those numbers are there, they've made their conversion from being just oversold to locking in what we call locking in an embedded, if you will, trend to the downside. And then you can just, sometimes when that occurs, you just lay on this number. See what happened here? Notice the embedding was here. See how it just laid on that. When the market is ready to pop, the red line will get first. Typically, it'll run over the 80 number before price turns. That's why price, momentum, you're trying to figure out which one leads which. In the GDX, look at how you're just coming down with the embedded reading. Been bearish, and that's where this market is. Gold-silver ratio. and thanks to our friend, it was Jim, he pointed this out to me this week, and I appreciate this so much. This market just laying on that number. It's not ready to do anything. It's about as neutral as I can say. It's trying to close under it, and if it gets under this little bit of area here, that will add fuel to the fire. In the end, in order to, I think, my theory, in order to make a low in the metals, the gold-silver ratio should come in, not go out. In the silver market, you took out the other days. This is the outside day up right here. Had an inside day yesterday, took out that low. I'm looking to see if you can get to that Bollinger Band. That is my objective, the way that I teach charting. We'll see if it happens. Momentum, you're not oversold. There's no reason the market can't move itself down. In the copper market, a big failure. Lower highs, lower lows. You got as low as 270.75. The Bollinger Band's 270.10. And just because you hit a Bollinger Band doesn't mean you can't start riding that band. Always remember that. Very important. But more important, is the market embedded or not? Always look at what momentum's doing. Momentum in this chart, down. Lower highs, lower lows. I realize it rallied back up. If you're down like this, where do you typically go to? This is what I teach again in the charting course. I think you go to that 18-day average of closes most times to try to figure out what to do next. Market down to the band, comes back, fights there. Back and forth action. Palladium market, lower highs, lower lows. Now this has got a very funny momentum. It's actually trying to stay up. It's a bit of divergence. If this market were to take out 920, I think you'd capture some shorts. So the bears have to defend the range in the 18-day average and force that market to turn its momentum down if they want to keep control. In the dollar index, as I said, and I'm sure that when I'm gone something will happen, but you are caught in this no man's land of the dollar index, where you get to the upper Bollinger Band, you fail, you make runs at the lower Bollinger Band, you don't go anywhere. The market is looking to see what happens. With that thought, remember, momentum is pointing up. Something here is trying to kick the market to the upside. Where it goes, I can't tell you. In my charting course, I'm going to teach you moving averages, but I'm not going to teach you with just the ones you see here. I use more than those. Then I have a lot of my little tricks with stochastics. I really teach Bollinger Bands in a way that I don't think you've seen it before. And these are called window envelopes. Not all the time when you get to a Bollinger Band. There's other numbers to play with in there, and you use the momentum in those to try to come together. I give you how to plot those window envelopes. It's complicated, but it's easy to plot them. I mean, I make it so simple for you. And then I write market reports with specific buy here, sell there, and I cap it all off every morning. I try to record a video for you at 8:30 when I'm in the office, obviously. And I'm going to repeat again. I'm taking a 1-week vacation. I'll be back August 13th. So if you want to take advantage of this, either call my staff, they'll get you set up. You can go to our website, read about our charting course, and that'll take care of you. And you can always click up here. In the meantime, I won't get a haircut. I'll look the same, and I'll see you August 13th.